Hello, everybody. Look, they think I'm going to play the flute. Lovely. So before I even get to introducing myself, how has Climate Week been for all of you? Pretty spectacular. Starting with that march and with Greta, unbelievable. And, you know, some of us who are in this business are completely exhausted. It's only Thursday. There's been a huge surge in support. This year has been so much bigger than other years. It's truly inspirational. I went to the opening ceremony where Governor Inslee spoke, and one thing he said was that the 25 states and thousands of cities across America that have signed on to the Paris Accord agreements constitute something like 75% of US GDP, and would actually be, if we were to secede from the federal government, which of course he didn't say that, but I'm saying that. If we were to secede from the federal government, we would be the third largest economy in the world. So don't worry about what the federal government has done with the pretending to leave the Paris Accord. It hasn't happened. It's not going to happen. We're making the right things happen. So thank you, all of you, for making the right things happen. That's really cool. We are all in, right? Right, we are all in. Okay, so who am I and what am I doing here? I'm Pat Sappinsley. I run the Urban Future Lab at NYU Tandon School of Engineering. That's a center for market-ready solutions to climate change. We run 5 programs: the Acre Business Incubator, where we scale up young companies who work on smart grids, smart transportation, clean energy for buildings, and everything for a smart city. We have the ParaBridge program that scales up intellectual IP from universities. We have the H2 Refuel program that's trying to build an economy around clean, renewable hydrogen. We have a program with NYPA where we're sourcing innovative EV and storage for their grid. And we have the Clean Start, which many of you might be interested in. It's a program that NYU runs with us that teaches career changers who want to join the clean economy everything they need to know in order to join the clean economy in evening and weekend classes for 1 semester. So Joe, where are you? Oh, he's hiding backstage, sorry. There's a guy in a plaid shirt called Joe, you'll see him in a minute. He runs that program. If any of you want to sign up for it, talk to Joe or look on our website, ufl.nyc. You should all look at our website anyway to sign up for all the great events that we have. Okay, we are running this together with Solar One, who couldn't be here tonight. NYSERDA sponsors everything we do. We're so lucky to be in New York State, where we have a government that really cares about clean energy and puts their money where their mouth is. Green Tech Media, thank you, Green Tech. You are live streaming this, hello. And the beer is donated by Lagunitas. So thank you, Lagunitas. Let's have a hand for them. A lot of noise for Lagunitas? Okay. And then no noise for Lagunitas, because what we don't want is for your beer bottles to fall over on the ground while the speakers are speaking and we're live streaming it, so hold on to your beer bottles, okay? All right, what else? Cell phones, turn them off. Note cards are being passed around so that you can write down your questions. They'll be curated a little bit and given to the moderator. Tonight's thing. So it's carbon to value, as you know. The idea behind this is that in the absence especially of a price on carbon, and given that we've been throwing carbon as a waste product into the atmosphere for 100 years, maybe a little more, if we can get high value products out of carbon, the market will sort of make a price. So what we want to do is capture this waste product and turn it into something of high value. And we need to do that to clean up the atmosphere. Our speakers will tell us how we're going to do that. Okay, so our speakers will be led by Samir. Come on out, everybody. Come. Okay, everybody else can come sit. Why don't you all come sit while Samir is coming? Okay. So our moderator tonight is Samir Rashid of Pure Energy Partners. He will both moderate and participate because he's done a lot of work in this area. He's been at Pure Energy Partners for 9 years. They have worked with the Carbon X Prize, which he'll tell you about. He co-founded the Circular Carbon Network, which he'll tell you about. He's been an advisor to startups. He actually spent quite a while in our incubator helping the startups. He's on the board of Hevo, which is a wireless charging company that was in our incubator. What else am I supposed to tell you? Oh yes, in ancient history, he co-founded a startup that converted food waste to biogas. So Samir Rashid, I leave it to you to start, and the others can introduce themselves. Thank you, everybody.
Thank you, Pat, for the kind introduction. Thank you, everybody, for joining us tonight. Particularly excited about this event because it's a culmination of a lot of activity in this space that's been happening in the last several weeks. And it's been something that, as Pat mentioned, my colleagues and I have been working on for about 9 years. And when we started out, we had to spend a lot of time explaining this to everybody, and now people are telling us about it. So the world has evolved significantly in the last 10 years. And some of that's manifesting, as I mentioned earlier this week. So a few things that happened so far. Secretary Moniz laid out a policy roadmap for R&D in the space, and he announced that this week at Climate Week. The Circular Carbon Network launched a comprehensive index and deal hub, which is essentially a database of companies that are across the sector, and about 250 plus companies are in that database, and 57 of them are actively raising money, and that's accessible to accredited investors and to members of our network. So we encourage you to sign up for circularcarbon.org to see those deals and see those companies and learn a little bit more about the space. As Pat mentioned, I am intimately involved with the Carbon X Prize, which is an incentive prize that is awarding up to $20 million to companies and technology developers that are capturing CO2 and creating value from it. The X Prize also announced a carbon removal prize this week, which is sort of a natural evolution from the Carbon X Prize. And just yesterday, the Australian and Japanese governments announced a collaboration to innovate and share technology and develop technology in the carbon recycling and carbon to value space. And on top of that, this is the third sold out event this week. Even last year, we had an event that was less people than this. So things have changed quite rapidly, and there's something happening beyond our little niche of people who've been doing this for the last decade. So the basics of what we're talking about here, essentially there's a lot of carbon, mostly in the form of CO2 in the atmosphere and in the oceans. And essentially what we need to do is sponge it up and do something valuable with it. And there are a variety of different ways to do that. And you can do it from a removal perspective, from a sequestration perspective, from a storage perspective, from a utilization perspective, and from a conversion perspective. So I know that sounds like a lot, and it is a lot. There's a lot of confusion on the topic, but hopefully we can clear up some of that confusion tonight. The end goal is for this sector to create economic and environmental value. So the types of technologies, the types of business models that we're talking about are either low carbon, carbon neutral, and in some cases carbon negative. So what has brought us to this stage now? Basically, in the last 10 years, we've seen an early ecosystem develop, things like the Carbon X Prize, Carbon 180, Circular Carbon Network. We've seen early adopters and early innovators. So surprisingly, we learned from our index and from our database that over $2 billion has been raised in this sector very quietly. Some companies are beginning to scale and commercialize, and some have raised hundreds of millions of dollars over the last several years. So there's a lot of quiet but significant activity already going on, and people are starting to notice, people are starting to pay attention, and more investors are shifting their theses to this space. More corporates are investing in R&D, and more incubators are popping up, more accelerators are popping up. So there is a lot of entrepreneurial activity, and what the Circular Carbon Network is focused on is connecting that community together and helping them share knowledge amongst each other, including data about companies, and ultimately that connected, networked, knowledgeable community will increase capital flow. So that's our goal. I'd also want to mention that part of the reason why this is possible now is because of cheap, clean electricity, which is a key input for these types of technologies. And not only is it important for the economics, but it's also important for the carbon balance. The other aspect of what's been happening, as I mentioned, there is an increased awareness, but there's also an increased sense of urgency. And there's a lot of information out there from a variety of different sources, but last year, the IPCC report came out and basically said we can't get to our goals without carbon removal. So people are aware of this. People recognize that it is a complement that is built on and in addition to cheap, clean electricity and electric vehicles and other things that are happening across the other sectors. And importantly, this attention is now increasing people's interest in developing new companies, starting their careers in this space, and investing in the space, as I mentioned. Next year, we kind of see it as a bit of a Sputnik moment when the Carbon X Prize is awarded, because basically these companies are going to be proving their technologies at commercial scale in test centers in Wyoming and Alberta, Canada. And that ability for people to see the modern industrial park of the future that is capturing carbon and creating value from it, we are excited about the potential that has to inspire other people and to help this sector scale. So the way we support that ecosystem is by bringing more capital to the space. And what we want the people in this room to do, what we want the people who are watching on the internet, is to join our network and start building that community, because we see it as a whole that is significantly greater than the sum of its parts. So if you think about a historical parallel with the internet, you have a router, you have a web browser, you have a fiber optic cable, you have a protocol. Individually, they're kind of interesting, but together they're the internet. So if you have a carbon capture technology, you have a company that's working on catalysts, you have another company that's working on carbon conversion, you have companies that are taking biological approaches that are better at the equator. So you have all of these different types of technologies and pathways and methodologies, and some of them need to combine together, and some of them work in different locations with different sites, different partners. So this idea of creating a network effect is really important. So I'm going to mention it again. Please join us at circularcarbon.org, and we hope that we can do something special. And there is a phrase I heard, I don't remember where, but basically someone said that people generally underestimate what can be done people overestimate what can be done in a year, but they underestimate what can be done in a decade. So if you look at historical parallels again, in 2008, the Tesla Roadster was launched, and by 2018, there was 100 billion plus in announcements from car companies investing in the electrification of their fleets. In 2003, the solar PPA was invented, and there was basically zero installations of solar in the United States, and a decade later there was 12 gigawatts, and in 2019 I believe it's 70 gigawatts. So a lot can happen in a short time, and we think that the innovators in this room and beyond are going to be a big part of that, and we're definitely very excited to witness it and support it. So with that said, I'm going to ask our panelists to introduce themselves, starting with Bill Lease from Braemar Energy Ventures.
Yeah, good evening. So my name is, as he said, Bill Lease from Braemar. We are a venture capital fund that invests in typically early to mid-stage companies that are in the energy tech space. So that's across sectors. It involves energy supply, it involves energy transport, it involves buildings, and also heavy industry. So we kind of cut across all those lines. We believe there's a lot of interconnections, especially today with the amount of activity going on, for example, and not related directly to carbon to value, but like in the EV industry, where you cross the grid, you have cars, you have oil and gas companies now trying to figure out how they're going to play into it. But it's moving across industries, so there's this very big interconnection going on, and it will only increase across the sectors. We've been investing for almost 17 years now through 3 funds. We're currently managing a little over $600 million under management. We've invested geographically, very broadly across the United States, also a little bit in Europe, and then we also have a fair amount of interactions with Asia as well. So it's pretty broad in terms of how we cover geographically. We have a real sweet spot for the lean startups that we didn't do in the early days because we were initially very supported by the ERA funds in some of our early bold things where we did a lot of project-oriented stuff, which is not the typical VC model. But on the other hand, we learned a lot from it, and hopefully a lot of it will apply to some of the things we're going to talk about carbon to value today, about how to get past some of the capital hurdles. And I've been around doing this for a lot of years. I'm not going to say how many years, a lot of years. And that's me.
I'm Denise Grab. I'm Western Regional Director at the Institute for Policy Integrity at New York University School of Law. We're a think tank and advocacy organization that focuses on improving the quality of government decision-making in regulatory agencies throughout the country. We focus particularly on natural resources, energy, and environmental work, in particular encouraging policymakers in these spaces to account for the cost of climate damages in their decision making. One of our major initiatives recently has been encouraging state electricity regulators to consider the cost of carbon damages in their decision making. So we've been instrumental in getting electricity regulators in 10 states to use the social cost of carbon in integrated resource planning and zero emissions credit programs, among other proceedings. You can check out our website at costofcarbon.org to get more information about that. And we basically try to make sure that these externalities are internalized in the markets.
Staff Sheehan from Airco.
Hey, I'm Staff Sheehan. I'm the scientist here, and I'm the Chief Technology Officer of the Air Company. So the Air Company develops technology that transforms carbon dioxide and water into ultra-high purity alcohols, with the only byproduct being oxygen. So we make carbon negative alcohols. The way we do that, using only water and carbon dioxide and renewable electricity we get from solar panels, you could call artificial photosynthesis. So we're taking a lesson from nature, nature that's been doing photosynthesis for 2 billion years, and it's where all the oxygen we breathe comes from, so it's kind of important. We're taking a lesson from nature, trying to make that process better and more efficient to make ultra-high purity alcohols, because nature's shown us that, using water and carbon dioxide as your only inputs, and oxygen as your only byproduct is very environmentally friendly and can be deployed at scale and can be deployed without a lot of environmental surprises, so to say.
Great. So, staff, I mentioned some of the pathways. There are biological pathways, there are technological pathways, there's trees, there's phytoplankton, mineralization, conversion to chemicals, conversion to fuels, conversion to building materials and advanced materials, on and on and on. So can you speak from a technological and scientific perspective about those pathways and how Air Company fits in?
I think you got through about 5% of the things you can do with CO2. Right. Sometimes I feel like I think, have you seen the movie Forrest Gump? Bubba talks about things you can do with shrimp. So I feel like I'm that guy about CO2 sometimes. you could take CO2 and you can turn it into building materials, you can turn it into polymers, you can turn it into chemical intermediates, you can turn it into alcohols, you can turn it into a lot of different things. The thing that a lot of people are working on right now, though, is everybody here used fuel in some way to get here. Some people in airplanes, some people in cars. And even though you run into the wall, that is the second law of thermodynamics when you're making fuel, where if you factor in the combustion of the fuel, the best you're going to get to is carbon neutral. That's a much better. That's a lot better than what we have right now, pulling fuel from the ground and just burning it and releasing the carbon dioxide into the atmosphere. So I think a very popular thing to focus on for a lot of CO2 converters is fuel. There are the limits are your imagination and the chemistry of what you can do with the element carbon on what you can turn carbon dioxide into. You can make carbon nanotubes, you can make fly ash, you can make all sorts of crazy stuff, concrete, and you can make them in ways that are carbon negative. So hope that answers the question in a decent way.
Yeah, so a lot of these companies are essentially platform technologies where they can make intermediate products, and depending on their customers, depending on market prices, depending on a variety of different factors, they can convert those intermediate products into a variety of different finished products. So with ethanol, you guys are making vodka right now, and we know that ethanol can go into gasoline as an additive. How are you thinking about Air Company's product line, if you will?
Well, I mean, we make ultra-high purity ethanol, so we make the cleanest ethanol that you can get. And you can think about that as right now when you make ethanol, you take a 6-carbon sugar and you break it down. And we'll get to how this relates to all other carbon dioxide conversion companies in just a second. But to talk about our case,
yeah.
When you make ethanol, which is the alcohol that you want in consumer goods, because it's not as toxic as all the other alcohols. When you make ethanol from sugar, you're breaking down a 6-carbon sugar, and so you get alcohols that have between 1 and 5 carbons. So you get a lot of really impure. You get a lot of impurities in the alcohol you get out of that. Mm-hmm. What our technology does is it builds up rather than breaks down. So rather than breaking down a 6-carbon sugar and getting alcohols between 1 and 5, we're just taking 2 CO2s, sticking them together, and making the 2-carbon alcohol ethanol. And that brings me to kind of, that's our application. We use carbon dioxide in a way that makes our product higher purity than anybody else because, we can use that technical advantage of building up rather than breaking down to increase the purity of our product. There are a lot of other applications as well where you can take advantage of the carbon dioxide to get to an end product that's closer. For example, carbonates, like calcium carbonate, like what's in cement. Carbonate, calcium carbonate is CaCO3. CO2 is CO2, carbon dioxide. All you have to do is you have to add a calcium and an oxygen to get to your calcium carbonate. So you have to add calcium oxide. And it's easier to build up from there than it is to use really high temperature processes to get through it. In other ways, it's fewer steps from carbon dioxide. And so I think taking advantage of a lot of the value propositions around new synthetic pathways to polymers, building materials, fuels, things like that, can help us increase the breadth of products you can make from carbon dioxide so that you can do things like fuel additives, not just ethanol is not the only thing you can add to fuel. You can take ethanol and you can oligomerize it to make kerosene. Oligomerize is just a fancy word that means put things together. When you make kerosene, that is equivalent to jet fuel. So there's a lot of different things that you can make from these carbon dioxide intermediates that get you to really promising fuel products. And we are, of course, targeting applications across the board like that. Mm-hmm. Renewable fuel standards, though, help. There are policy things that help us deploy in those markets, outside of the core market that we tackle. So like renewable fuel standards are helpful for us to be able to talk about the future benefits of our technology as well.
Mm-hmm. Great. So I'm going to turn to Bill. So you're very experienced in Clean Tech 1.0. You've seen everything. Like clean tech, it's a fairly diverse sector with different strokes for different folks. So basically, different investment models are going to fit for carbon to value, just like that was the case with clean tech. So what do you think is going to happen in the coming years as far as how this space gets capitalized?
Well, I think it's going to be, right, I think more than ever now that there's a chance to do early stage capital formation. The question is, how are you going to partner from the time you start developing things in the lab that are either spinning out of universities, could be a government lab or somebody's, think tank, and then what do you do to do a demonstration, and what is that going to cost? And so I think it's very important, very, very early to figure out how you're going to partner and lay the sort of supply chain of support, which a lot of 1.0, Clean Tech 1.0 people did not do. I mean, a fair amount of capital was raised, and back in the early 2000s, the ERA funds were out there allowing you to get DOE loans, and and sometimes there were grants, and there were a lot of things. But people really didn't do their homework in a way to think about how many steps it would take to actually commercialize a bio-based chemical or different ways of producing fuel using different kinds of biomass, and that became very problematic. So I think it's really going to be thinking through partnering early on. People were reluctant, entrepreneurs were very reluctant in early days to just start working with a BP or a BASF or somebody like that, because it's not easy to do, but I think there's going to be a lot more of that. And I think those companies, although not so easy to work with necessarily, are going to be more amenable to supporting entrepreneurs early.
Yeah, and on that note, what do you think those companies can do to be more proactive? And they see the writing on the wall that there is regulation coming, that there are market opportunities, there are technological opportunities. So how do they get convinced faster and develop models to partner either through accelerators or strategic partnerships, R&D partnerships? What do you see on that front?
I'm seeing it getting better. I think I look at Shell as an example, where they're really putting their money where their mouth is. I mean, they're spending $2 billion euros a year now to help support innovation. They're looking very broadly about what they're going to be in 2050 and beyond. So I think that people have to have that kind of foresight. I'm calling Shell out because I've seen so much activity, but I've seen Total and BP and now Chevron starting to get more active in the oil company space. I think it's very encouraging. The utilities are all talking about decarbonization, and even the more regulated ones in the South and other parts of the country, which are not like the Northeast or California, are really decarbonization is no longer like, oh, we should decarbonize. It's like we have to decarbonize. Mm-hmm. So they're going after a lot of renewables. They're targeting ways to work in some cases with the ag tech sector to help them become more energy efficient. They necessarily haven't played directly into carbon to value directly, but I think they're starting to think about it. And so I think this push now, what's going on with 2020 coming up, and for those 94 countries that signed the accord, that people are seeing this as more and more real, and that there's a more of a precedent being set by corporate policy. And then, of course, in the U.S., many of the states are being very, very positively inclined to do something about carbon to value. So I don't think it's easy. I think it's still, especially if there's capital intensity, I think we're still going to have challenges, but I think it's getting better.
Yeah, and we see those corporates as a key part of our network for this exact purpose of early stage partnerships and accelerating those relationships so it doesn't happen too late in the cycle. So we certainly invite those companies to take a look at the companies in the index and see what potentially makes sense for you. Denise, what's in the policy toolbox for this sector, both specific to this sector or things that could be translated from what's been happening in transport and renewables, et cetera, into this sector?
Sure. There's a wide variety of policy options that could benefit this sector moving forward. just straight off, I think all the economists at my center will get mad if I don't talk about carbon pricing first. So the most one of the most important tools that could be out there would be making polluters pay for the cost of the carbon emissions that they're putting out into the environment. So if you put a dollar per ton value on the amount of carbon coming out of a factory or an industrial process, that incentivizes that factory industrial process to look for other things to do with that carbon in the short term, and also helps these other cleaner technologies compete on a more equal footing in other parts of the market. So kind of a 1-2 punch on that. And those carbon pricing policies can involve either a carbon tax or sort of a cap and trade system. And we've seen some of these examples in states and also in some other countries, such as the EU carbon trading market. There's also offsets, which are for sectors that are not covered by a cap and trade system or like a low carbon fuel standard system, that would allow companies that can't necessarily achieve their mandated reductions themselves to purchase those reductions from other clean technologies. So, for example, if your ethanol company were making clean ethanol that wouldn't happen otherwise, or if someone was deciding to institute cleaner farming practices or reforest an area, these are sort of natural carbon sequestration processes, you could pay to buy a credit for that reduction that wouldn't otherwise be accounted for in the trading scheme. And then there's also subsidies. That's one of the areas we've seen the most action for carbon capture and sequestration so far. So last year, the tax code was amended to allow to expand the tax credit for carbon capture, carbon reuse programs with the 45Q rule, and it expanded to include more types of carbon reuse, and it also expanded to more across the board there. There's also pollution control mandates, so you could institute particular performance standards on types of industrial processes or fossil fuel extraction or other sectors to require cleaner production at each individual facility, and that might also induce those producers to use those waste products in better ways. There's also one important factor in a lot of these carbon sequestration and scientific and a lot of these carbon sequestration efforts. You have to make sure that the carbon that is being reduced is actually being reduced, and that can be tricky. There's a lot of hype out there, and some things might not always be actually getting the reductions that they might claim. And so, some of the jurisdictions that have started encouraging reductions through offsets, like California with its low carbon fuel standard, and like the EU with its trading scheme, they've created protocols with clear metrics and clear ways to monitor to make sure that these reductions are actually happening as claimed. So that's very important. And there's also just direct procurement and spending. So governments have more discretion kind of on how to spend their own money than sometimes than how to force other people to spend their money. So when a government is deciding how to buy how to buy concrete, they might decide to buy for building a building. They might decide to buy the carbon sequestering concrete rather than dirtier concrete.
And what do you think is going to be most effective in stimulating markets? Because obviously there's policy for R&D, which we're going to get to in a little bit. But what do you think is going to create demand for staff and other companies?
I think, and certainly my center thinks, that high carbon price that fully internalizes the costs we're going to see from climate change is the most important thing we can do. And right now, the carbon prices that exist out there in the real world are below the social cost of carbon, which is itself probably an underestimate. So right now, the social cost of carbon, that is the estimated cost based on economic damage models of the harm that will come from each additional ton of carbon released, it's about $50 a ton. And as I mentioned, it's probably an underestimate because it doesn't include things like wildfires and other types of uncertain damage. So that's about $50 a ton. The carbon trading markets we're seeing out there, like Reggie is pricing at about $5 a ton right now. The California trading market's about $18 a ton right now. So we need to find ways to actually make sure these programs are robust and really reflecting the costs of the harm that's coming from these emissions. And I think once we do that, that'll be effective at least getting us toward parity between these technologies. There is also just, these are newer technologies. There's a hump to get to scale, which I'm sure my co-panelists can talk a little bit more about. And so, some of this early spending and R&D investment might be more important for that stage. But once we're kind of closer to commercial scale and really trying to make sure that these programs compete effectively, I think that carbon pricing will be very important.
So, staff, you are creating a product that you're selling to customers. Why did you start the company? Was it to create a product that you knew you could sell? Was it to solve climate change? Was it a little bit of both? Was it just cool technology that you realized could be turned into a business? So what motivated you, and how much of that was market oriented?
I mean, just say of the three options you gave me, and probably any other option you'd throw out there, I'd say to solve climate change. That's the goal. But with that in mind, there's no, everybody says there's no silver bullet, and sometimes when everybody says something like that, it's right. And I think it's right in this scenario. So we're hoping to contribute to the portfolio of solutions that will ultimately stop climate change. Because I'm going to be optimistic and say we'll do it. It's going to take a lot of effort though. And I think the best way to get both the social and the technological change to do so is to start out in markets where you can actually make something that a person can have. And that's why we're doing what we're doing. It was actually kind of there's also a bit of luck factored in there, that the first time I threw together an electrolyzer, it put out ethanol and not just one of the many other products you can chemically reduce carbon dioxide to. So that helped to kind of guide us toward working on alcohols. So I think, most people, I would imagine, that are doing carbon dioxide, like CCUS carbon dioxide capture, utilization, and sequestration companies, they're probably not doing it. I think most people are doing it to fight climate change.
So when you talk about your market potential with investors and your pathway to scale, what does that look like? What is your story there?
Well, pathway to scale is something that market potential is, you can do the research on Google. There are a lot of market companies that can tell you if you have a product in XYZ market, what's its potential, how far can it reach. But so analyzing markets for products made from carbon dioxide is not really any different from analyzing markets from products made from, fossil fuels. It's just harder because we have to make the product from carbon dioxide, and that usually costs more. But the thing that you touched on that I think really, and Bill, feel free to chime in on this at any point. The thing that you touched on that I think is the biggest hurdle for a lot of companies, both at our stage and at larger scales and at smaller scales, is scale. Getting the technology to scale and doing that in a way that you are, not just burning a ton of money on something that's really high risk, which is a hard sell to investors, is the challenge for a lot of companies. So being able to scale and being able to create value while you scale, that's the big challenge for us. Our technology, we're able to adopt a lot of aspects of existing oil and gas technology into our balance of plant. So that's the parts of the technology, like the compressors and the things around our true innovation that that are not as high risk as, our catalyst or our, the things that actually do the chemistry in our process. And so, I think people have to kind of start with the low-hanging fruit when they scale, and that's the approach that we've taken, and then build up as you de-risk the parts of your technology that are, not low-hanging fruit, the ones that you have to really reach for. As you scale up, you can get to the, really hard parts of it. Like, for example, we capture carbon from we capture carbon from select locations that are already pumping out fairly pure streams. Now, if we didn't capture it, it would just go straight up the stacks into the atmosphere. So we're still removing carbon that would otherwise be causing climate change. But, it's better than trying to do air capture or trying to pull it out of a coal or natural gas-fired power plant, because you get a cleaner input, and you don't really need to put in a lot of R&D and a lot of risk into getting your CO2 to enter your process in the first place. So that's and that's kind of an example of what I was just talking about focusing on your technological innovation and managing your risk appropriately as you scale. So I don't know if you want to add on to that at all, your experiences with any portfolio companies in your fund, or?
Yeah, sure. No, I'm happy to add examples. So one of the companies that we invested in, which had a great opportunity and didn't have as happy an ending as we would have liked, was a company called Solazyme. I don't know if people have heard of that company, but it was a darling of Wall Street back in the sort of 2010-11 time frame. 2011, that's when they went public. And a very good entrepreneur and two very knowledgeable co-founders. They diversified across a number of areas. In fact, they got into some high-value, easy products to get into initially. So there was a pretty good strategy. But the market, one is things took longer than expected. They had a very large project in Brazil that was being done with the Brazilian Development Bank. So they had a lot of nice financing. But things started to take longer. So the things that they started with, like working on nutritional products and beauty and things for high value, they started getting more into commodity markets to grow. They didn't really anticipate just how hard it would be to get this massive plant up and running. So they got capitalized. They were at the point where they went, past the valley of death as far as getting. But commodities ebb and flow, and the price of oil in 2008 summer was like $150 a barrel or something like that, and then by the time you got to 2011, it dropped substantially. And so that impacted some of the markets they went into, which they probably shouldn't have gotten into commodities. They probably sort of stayed at the high end longer and not made such a large bet, in such a big facility. So I think the way you're doing it, which is to sort of, work carefully towards what you can do and ideally, bring in some cash flow is the way to go about it. And then, find partners who can then help you scale along the way if you're going to go after the bigger markets that are harder to manage. But once you've proven yourself at one level, it's a lot easier to attract the partners who have a lower cost of capital and have deeper pockets. And then there's always the possibility that you may decide, I'm at a point now where, I've created a lot of value and maybe it's just time to exit because you don't want to have to deploy these, larger amounts of capital to make your outcome. Depends on what the market wants and what you decided.
And I think there's a lot of carbon conversion businesses that are taking advantage. I mean, you mentioned for Solazyme that, they ran into trouble trying to scale too big and too quickly, or build a really big plant. Is that a good way to kind of summarize it?
Yeah, I was trying to say that they actually had the funding to do it. And even after getting the funding, they weren't able to, Wall Street's forgiving for a quarter or two, but by the time you get to the third quarter, forget it, right?
Yeah.
And that's when the stock started tumbling, and there were cuts, and there was an awful lot of public debt. Again, good people, excellent team, great technology. It was they were on a great track for a while, but they didn't anticipate some of the hurdles they would run into. As far as capital formation goes on projects, that's still tricky. And I think that's, again, if they had partners, but they could have they had Bunge, for example, as a partner in Brazil. That's, pretty good for edible oils. I mean, it's the biggest one in the world. So, but even then, I think if you can get partners who can help you or you just don't get too aggressive too quickly, and stay at the high end of the market. I think you were using Tesla as an example, or somebody was
Sure.
With the Roadster in the early, people were selling
That's
to the
right.
high end.
That's right.
You kind of have to stay in that high end for a while before you really start to get into the commodity side of things as much as you can.
Also on top of that, for specifically, a value proposition that carbon conversion technologies can
Yeah.
have is the fact that they can deploy modularly and deploy all over the place, because there's no shortage of places where there's a CO2 stream being pumped into the atmosphere.
Right.
And so, finding a source of carbon dioxide is not the problem.
No.
So, I think a lot of business models can evolve to more decentralized production rather than having to build one giant plant. And you do get a big economic incentive for economy of scale, things like that. But I think there's a lot of drive for people and for small local governments to have local production and to buy local. And if you can, build out your plastic, let's say you're turning carbon dioxide into plastic, just for sake of example. Because I've been using Air Company as an example and for everything that I've said so far, and that's selfish. For carbon dioxide to plastic, you could just cite a lot of people are using flue gas, which is abundant. It's low concentration carbon dioxide, but not as low as the air. And you can cite, if you can convert flue gas into plastics, and you can tolerate a lot more impurities in plastics than in a lot of other products too, then you can produce them on site anywhere, and then you reduce your carbon emissions of transport, you reduce your cost of transport, you reduce logistics, you reduce all sorts of other things that, in some places they might be minor costs, like, perhaps around here in New York, since there are a lot of established channels to ship in and out of the city. But if you're looking at deploying something in a more remote place, the costs can be massive. Mm-hmm. So there's value propositions for carbon dioxide conversion, not only around the one that we take advantage of, which is building up rather than breaking down, but also in decentralized production and decentralized consumption. Mm-hmm. So, and there are other companies that are looking into business models and technologies that do that. So, and many of them are in the circular carbon network, and they are
Sure.
of those 57 you said that are raising money right now too.
Yeah,
so,
that's absolutely right. So, Bill, there are a lot of smart people. Carbon 180, friends of ours, Global CO2 Initiative. They've done some really rigorous analysis on the market potential, and addressable markets are in the trillions. So, what is your skeptical take, because you're paid to be skeptical? What is your optimistic take, because also you have to see a bright future? So when you think about the markets, what is the positive scenario? What is the skeptical scenario?
Yeah, I think on the skeptical side, the rate at which corporations will move is relatively slow, and while there's well, I said that earlier, they're starting to speed up. I get concerned that, like any other entrepreneur, while I'm encouraging partnerships, I'm also saying, you really got to think about how you're managing your capital, because you can go out of business pretty fast. You think you have 24 months of runway, and you're encouraged to go a certain direction. You start adding resources, and then you find that you can't actually get the product or service onto market fast enough. That could be real trouble, and that's happened a lot. And it's happened particularly with capital-intensive businesses. So I think that what people are trying to do now is very good. I think the business model improvement is much, much better. And I think that the entrepreneurs have probably taken lessons from some of the Clean Tech One stuff, hopefully. But I think changing systems from hydrocarbons to alleviate hydrocarbons and add capital expenses, and it's a slow kind of a process. It's not like an overnight thing. It's not like internet commerce where, man, if you have the right service, it'll just take off in a year or two, right? It's not going to happen.
So you gave the lesson of Solazyme. Give a success story lesson from Clean Tech 1.0 that you would want to highlight to entrepreneurs in this space.
That's carbon to value, or?
Yeah.
Okay. Well, it's
Well,
taken a
you the lesson can be from anywhere, but
Okay.
what would you tell carbon to value companies? Like, here's a good case or two to follow.
Well, any case that I talk about in carbon to value is going to be, breaking through a lot of complicated and difficult, sort of barriers. So nothing's going to be smooth. If it was smooth, it would be, well, I don't know what it would be. It wouldn't be real. But there.
Preach. Yeah.
No, but there are two companies in our portfolio that I'm very happy with right now. One is a company called Enerchem, which has been out there for a while. They make methanol and ethanol. They basically take MSW, they gasify it partially in a very low severity, use low temperature pressure, and they take take all the inorganics out and like sort it at a material recovery facility, a MRF. And then they take that and they make, depending on the market, they'll make methanol or ethanol. They have a commercial plant operating in Edmonton, Canada, with the city of Edmonton. It took a while to get up and running, but it's running commercially. They've built a pipeline of projects globally. They have projects going to development in the Port of Rotterdam to make MSW out of waste from the UK that's shipped over to the Netherlands. They also have another project in eastern Canada that involves several major players that are oil and gas and chemical companies. So that's moving along nicely, and they've built a pipeline across the globe. And I believe that one, which has taken a long time to harvest, is going to get there. But, they've brought in some very big players, and they've had some very tough moments, trying to get through the process.
Well, it sounds like they had a good strategy, just like Solazyme did, but maybe they just had a little bit more luck as well as more success on some of the execution and timing, because it seems like the formula is similar, but there's all these other external factors. What do you want to hear from the 57 companies who have a chance to pitch you? If they had a chance to pitch you, what would you want to hear from them as far as your investment model and what you want to see out of this space?
Well, I think, over the last 5 or 6 years, what's made it more interesting to figure out how to do lean startups, which hasn't something that was happening back in the 1.0 range.
Right.
So what can you leverage early on in terms of IP? Who do you work with? How can you, basically reduce the CapEx? Really focus on what you're really good at, and staff was saying that before, but make sure that you're, taking full control of your process, but figuring out how to outsource things that you can't do. And I think that's the lean startup concept, that you only, and you get to test the waters while you're doing it. So if you make mistakes, you make small mistakes, not big mistakes. So if you put $30-40 million into a demo and it blows up, not great, right? Some people might recover from it because they've got either other sources of capital, but most people would be pretty disappointed. So if you can put out a few $1 million and test the waters and, figure out whether you're going to make vodka or something else, you can sort of begin to sort of see, yeah, this is going to work, this is going to take place, and you have time to fail. The biggest thing I think right now is allow yourself time to fail.
Right.
That wasn't happening. Everybody thought they were just going to win.
That's right.
Especially
That's
the storied name in Silicon Valley. It's like, boy, what we did with computers and the internet and biotech, we're going to do exactly the same with industrial plays, and it didn't work.
So essentially, figure out how to make small bets and small experiments.
Lots of little small bets. Yeah, because it's
and
okay
work
to
with partners.
It's
work
okay
with
to
customers.
fail. Failing
early
is
on.
part of it, but just don't make
So switching to early innovation, Denise, you had a chance to take a quick look at the fact sheet for the Clearing the Air initiative from Secretary Moniz.
Right.
He lays out very nicely the variety of different pathways and what can be done from an R&D perspective.
Right.
Can you speak to that? I know you focus a lot on state and local policy, and this is a federal initiative, but can you explain that to the audience, what this initiative, and in absence of federal action, how can states or cities even, or universities or other entities adopt some of those lessons or strategies?
Sure. So as Samir mentioned, Secretary Moniz announced this new plan, basically, ideally for, we're all hoping 2021 turns out the way we're hoping it does. Under a new administration that is, but even potentially this administration, because, carbon capture is not necessarily just for liberals. There are some conservatives who would support certain aspects of this technology as well. But Secretary Moniz, sort of from his expertise as leading the Department of Energy and really from the inside knowing how government functions and how the different parts of different agencies work together on these issues, came up with this grand strategy for basically government spending to help develop the different categories of carbon removal tech to the next level. So the plan breaks down the carbon removal strategy into a bunch of different types of buckets. So the direct air capture, sort of sucking carbon out of the air for products rather than the flue capture that staff was talking about. So there's plans for how to kind of develop that and take it to the next technological level through specific targeted investment. There's terrestrial and biological type investments. So these are kind of using biotechnology and existing, kind of improving biotechnology to improve the efficacy of carbon sequestration, carbon capture by plants, basically using different types of technologies to improve that process. So trying to help develop that research through these targeted funding campaigns, as well as carbon mineralization, so using existing rock formations and potentially new rock formations to sequester carbon. So targeted funding for that type of program, as well as coastal and ocean carbon removal. So trying to assess how to improve the viability of ocean seeding and trying to use plants in the ocean and other types of technology to sequester carbon there. So the program lays out specific goals for each of these sectors and lays out a 10-year plan with $10.7 billion allocated among 10 different federal agencies with sort of specific roles for who would do what in the grand tradition of federal government plans. A lot revolves around who has the authority to do what and how and where. But yeah, it's a very exciting program, and I do hope it sees fruition.
Can states do
Learn
anything
from that. Yeah.
In the meantime, competition
Yeah.
between some of these great governors who are doing great work on that?
Definitely, and we've seen. That's definitely been what's keeping me going a lot of these days in the last few years, is just seeing how much states are moving in the right direction on these issues. And it's not just the states you would think. It's not just New York and California, although that's exciting. But it's states like Nevada and states like Virginia. There's a wide variety of states out there taking major steps in this direction, and there's lots that they can do on carbon removal technology. So there's a lot of state universities that can help with research efforts. There's a lot of currently 10 states that are home to over a quarter of the U.S. Population and a third of U.S. GDP have active carbon pricing programs. Those can expand to other jurisdictions. It's not just states that can do these. Cities can do them as well. Boulder, Colorado, for over a decade actually has had a carbon tax, and other cities have thought about doing that as well. So it's something even cities in red states could do. There's clean energy credit programs, renewable fuel standard programs, low carbon fuel standards, offsets, defining standards, state government procurement. So there's really lots and lots of opportunities for states to move forward in the absence of the federal government.
I never knew that Boulder had. I guess that's why everybody rock climbs to work there. I'm going to move to some audience questions before we...
Can I make
yeah,
comments
please.
about because it
Please.
ties into what I think carbon pricing and also when the concept of doing mineralization, not just mineralization that's naturally available, but also but through forced CO2 and through some process. But we want to mention one company that we have in our portfolio that ties us together. So we have a company called Carbon Free Chemicals. We call it Carbon Free. It's in San Antonio. And the first generation of company basically, or technology, has a project there that takes CO2, which gets converted into baking soda. And the way that happens is CO2 comes from a cement plant. It mixes with sodium hydroxide, and the end product in a simple case is baking soda. And you can make baking soda for animal feed. You can make baking soda for pharmaceutical. So you're at the high. You try and get to the high end, but basically that's. But what's interesting is there's a follow-on technology they have, and this is where I think carbon pricing and everything come together. But you need to make money without carbon pricing too,
Yeah.
which is the next generation takes waste heat and ultimately through using a series of salts, magnesium chloride and then calcium chloride, they end up making calcium carbonate, which Staff was talking about earlier. And they can do that in a way that is very competitive, and they can bring and when you look at what's happening in Europe, for example, where you're talking about 30 euro type prices in the market, that's, if you can sell product and be profitable, and then in addition to that, offset, in addition to 30 euro, you create that much more value. So let's say you could make 80 euros per ton for what you're selling that absorbs CO2, and then you don't have to pay the 30 euro. You really all of a sudden have that much bigger margin operating margin to operate with. So I think it's very exciting. I think you need the carbon pricing, though, along with being able to produce for the market. If the market starts to get saturated, then you really then have to have carbon pricing. But I think there's things going on in the marketplace with a company like Carbon Free and Air and others where you can really start to realize, wow, I'll make something profitable, but I know at the end of the day that there's going to be carbon pricing that's going to really help drive it ultimately into the mainstream and really give it a lift. So
Great. So I'm going to turn to some questions from the audience before we ask the panelists to share some closing thoughts. So this is an interesting question. How can smaller accredited investors play in the space? And when and how will retail investors get a chance? So I have some thoughts on that, but Bill, maybe you have as well.
Well, I mean, I think it depends on your risk appetite, but if you're a credit investor and you can invest along with some of the institutional investors that have had good success, and it's an area that you're passionate about, I think that's a great thing, and you can get in, sometimes get into those rounds. It depends. Usually, honestly, you typically would want to know somebody, or you're in an angel network to begin with. You sort of make your own way in. But I think there's opportunity. Usually you have to kind of be early, unless you know somebody, because otherwise the institutions don't usually have too many high net worths.
Yeah, so I totally agree with that. I think angels definitely have a role to play in this sector, even though it's probably a little bit more capital intense than the average software company. And I feel like what I'd love to see is hopefully there's some people out there on AngelList who have syndicates who have capability in this space, because to Bill's point, if you have someone smart that you can follow and leverage their due diligence. So anyone out there, start an AngelList syndicate focused on carbon to value. Another thing that's going on is there are, and I hesitate to say this, but there are people working on blockchain-based cryptocurrencies for carbon removal. And now that I got that phrase out of the way, I think we can focus on the actual potential value creation there, because the idea of carbon removal as a credit requires a lot of data and a lot of security around making sure that if there are 10 units of carbon removal and I buy one, they don't sell that one again to someone else. So there are a couple companies out there that are doing that. One of them is called Nori. And that's really for, it's less about investing in a company, but it is a way to invest in the value of carbon removal and also acquire carbon removal to offset your own activities. And what's really been interesting in the last couple of weeks is a couple of tech companies are pledging $1 million each. One of them Stripe, one of them's Shopify, to purchase carbon removal specifically to create demand. And what we think is going to happen, what we hope to see is, why couldn't every corporation say, I'm going to spend $1 million a year on this and create demand for people like staff and others who are putting carbon in soils or putting carbon in phytoplankton in the oceans. So that whole market, it does create value because even though it's not a product, it allows big companies to offset their emissions.
I can
Yeah,
add
please.
one thing to that too. I think that like you always see like the press releases about these companies that have raised 100 million, 200 million, crazy amounts of money, and like, the one question is, do you like maybe those are the outliers, and a lot of the companies that are making a lot of progress haven't raised quite as much money and don't necessarily need quite as much money to deploy their solution into a beachhead market or some sort of market that can at least give them the initial traction. Then they can go and get growth capital, which is a lot easier to access than angel or venture capital. Mm-hmm. So, I mean,
sure.
I think that like small angels can do a lot because there are, I mean, you just set up Circular Carbon Network. You know this better than me now, how many companies there are out there that are trying to make progress, and you know, a lot of them are making a lot of progress with a little bit of money.
Yeah, so and actually, thank you for mentioning the index again. And one of the holes we have in our index is that it's very North American and European centric, and we hope to grow that. And I bring that up because we have another question. Which country is doing carbon tech best? Which one can scale their tech and market best, and why? So I have some thoughts on that, but maybe Denise, you've seen it from the policy angle, staff from the market angle as well.
Sure. So, I mean, I know there's been there's been a lot of attempts to kind of, I know more from the carbon capture and sequestration at the large scale stage, and it has been a struggle for a lot of these plants to make it to market. But I know there's been some success recently in Norway with one of their plants that's trying to sequester carbon from industrial processes. And that country has kind of been able to work with the EU to, there was some concern over the effectiveness of some of the EU investment incentives sort of over the last several years, but they're reforming their process to provide kind of a bigger upfront innovation fund, similar to what Moniz has proposed for the U.S., to kind of provide a bigger dose of capital upfront and benchmarks along the way. And Norway, I think, is expected to be one of the main beneficiaries of that program.
Mm-hmm. Staff, any thoughts on that?
I mean, as far as what countries are doing a lot of, the countries that are leading, I think Canada is actually doing a great job, and we need to. America needs to do some catching up to Canada, because they have a lot. I mean, we're going to Alberta, so
yeah.
It's and it's a competition headquartered in Los Angeles.
Right.
We're all going to Alberta,
right.
So I think that So I'll shout out Canada,
yeah.
as a country that's really doing their.
That was definitely
weight.
one thing I was going to mention. I believe 4 out of the 10 Carbon X Prize finalists are Canadian companies, and over the last 9 years of working with the Carbon X Prize and on the issue, even early on, there were a variety of different federal programs to support R&D and demonstration for this sector, and there were provincial efforts, and there seems to be a very good hub brewing in University of Toronto, University of Calgary. But with that said, I think Europe is also doing some good work, and there's actually an organization, another friend of ours, called CO2 Value Europe, which actually is a member organization with a bunch of big corporates actually paying membership dues to focus on how they can leverage this space and build from the opportunities. So that corporate leadership from Europe is definitely there. But I would say don't sleep on the U.S. We definitely, despite a lot of challenges related to politics and policy and slow adoption and power of incumbent industries, there are a lot of really talented entrepreneurs and innovators here who have a lot of relevant experience scaling technology in other sectors, and now they're focused on this. And what we hope to see is the good kind of arms race coming from this, both from a state by state and province by province perspective, and from a country by country perspective. It's really encouraging to see Japan and Australia partnering together. We actually need to learn a lot more about what's going on in China, but we expect that this is a big opportunity for them as well, given the industrial strength there. And what I'd say is what I hope to see is multiple carbon Silicon Valleys. And there's a lot of opportunity for that to happen in Calgary, Alberta, because of the test center, and Wyoming because of the test center, and because big companies are there. There's universities there. So you have all the ingredients of what made Silicon Valley successful, and what we hope is that people will, instead of just going to Silicon Valley or just going to computer science, they'll start to become electrochemists like yourself, not only to save the planet, but to build a real business that can be profitable and scalable. I'm going to take one last question from the audience, and this is this might be too specific for this topic, but I'll kind of try and frame it in a way that will apply. But basically, someone was asking about essentially how do the potentially increased prices from this help low-income individuals, developing economies, because we don't want to just make living a low carbon lifestyle a luxury item. So how do we get to a broad-based adoption where costs are competitive for all?
All right, I can start on that one. That brings us back to our problem of scale for a lot of these technologies, because for a company to be able to sell a product for lower cost, we need to be able to produce it for lower cost in the first place, or somebody has to offer some sort of subsidy. But that's not that. Maybe you can touch on that after I'm done with this part, because we focus on keeping the cost low for production, and that is where that's where a lot of companies are working really hard right now, and all trying to scale in different technologies and different verticals. But on top of that, a lot of developing countries don't have the infrastructure for transportation, and that brings me back to the point that I made previously, that decentralized production, on-site production, being able to make your end product using just air and water and sunlight is a massive boon for developing countries, because then you just have to land a piece of equipment and you don't have to build an entire infrastructure. Land a piece of equipment, train people to use it. With enough technology development, you can make pieces of equipment easy enough to train people on, and make developing countries and communities their own producers of their own products, rather than having them buy them from us. That makes it a lot better to even for us, if we made our own fuel, then we wouldn't be as dependent on the countries that have it all sitting under them.
Shady people in the world have fuel.
So I would say it's not just about the products here, it's kind of also about the process and how they're made, and just all of these processes. So, one of the sort of buckets of carbon reduction technology is natural and working lands. And that's one opportunity where there is a lot of chance to work with kind of less advantaged communities, to work with, low-income communities, farmers, agrarian communities, to help support local economies, help create carbon sequestration opportunities there, and think about things in those ways. There's also labor concerns, making this, there are opportunities with these sorts of plans can help in certain industrial processes as well as certain energy production processes exist longer, which can help jobs stick around in certain areas longer. We have to be sure that when, we're keeping these factories operational, that we're not also resulting in increased pollution in the communities nearby these factories that would be affected. So we have to keep an eye on that and make sure that, air quality benefits and rules are enforced on these factories as well. But there are a lot of opportunities to design these technologies in ways that will benefit the broader community, not just the wealthy.
Well, I think in developing economies, particularly if they're mineral rich and oil and gas, coal rich, you want to really play to helping them. And I don't. This is not going to be very popular, but how can you keep a coal plant running if you are starting to get some very high penalties? Ultimately, you're going to lose a lot of money, or if you have a policy that says you have to stop, you stop. But that's not ideal. And people's lifestyles have been built around these things. So I think it's where your carbon to value really does come in, because if you can take the effluent CO2 and make various products and develop internal consumption, but also export, that becomes a very nice, sweet opportunity for those for that country. In some ways, but it's really hard. You can't just go in there and stampede them and say, okay, you're going to all of a sudden, take your greenhouse gas footprint away. You're going to have to really work through, probably a bunch of layers of industry and politics and.
Yeah, I don't remember if I'm getting the exact number right, but I saw a tweet where someone from MIT, I believe, said that half of the world's carbon emissions are in the air since Taylor Swift was born. So it's hard to look at a country that's just starting to develop their economy and they're using whatever energy they can and kind of tell them, sorry, you can't do that anymore. So you have to have that just transition. So I'm gonna just give a quick programming note. I'm told that the bar is open till 9 p.m. and everybody's welcome to stay and chat with us and chat with each other. I want to thanks again to NYSERDA, which is a great organization in New York State that's done a lot of great work across this space. So they've really supported the community. They've supported companies and markets. Lagunitas, Green Tech Media for the live stream. Thank you very much. Solar One, Urban Future Lab, and of course our host, the Green Space. So I'm going to ask all three of you to answer these questions as closing remarks. What's something that you heard tonight or even this week during Climate Week that makes you feel very optimistic about this space and carbon to value? What do you see as a specific challenge? And what can people in the room or people watching at home do to help you specifically? Bill, would you like to start? Yeah.
Great. I'm still thinking about the question. What did I learn this week? How is it going to help me? I mean, honestly speaking, it was more the observation of the number of young people that are so passionate about wanting to change that they're going to drive a lot of the policy that's going to happen in the next 20 years. And, some very passionate views that, it was really, I find it really incredible. I mean, I feel kind of bad about it, though, too, because when you have a 16-year-old girl who's taken a sailboat over to the U.S. and, has to sit, and say, look, you're literally putting me towards to extinction. You're like, yeah, you're not wrong if we don't get it right. And so, it wasn't one specific thing or enlightenment. I just felt that that was the nice beauty. Chaotic as it is, UN Week has been really brilliant because it's brought this incredible amount of young, passionate.
What do you see as a challenge?
Well, I continue to worry about the rate at which we're going to adopt to carbon to value. I think we're on the right track. I think there are entrepreneurs who are really thinking about how to be sharp about it, and pricing carbon is going to be absolutely like so critical. I mean, I can't even, it's like everything. So that all, and I believe that 2020 will drive a lot of good things. I just worry about the rate at which we can address the problem. It makes me worried. I'm still worried.
And what can people do to help? And you can absolutely answer that question from the perspective of an investor who wants to deploy capital.
Well, I mean, I think a lot of it comes down to getting very favorable, no, it really is, a lot of it has to do with carbon pricing and getting really favorable treatment for carbon pricing. And Section 45, Q40,
45Q.
Q45Q, sorry. It's a great thing, it's coming, but I think the IRS has to give much better guidance on what's going on there. You may study that better than I do, but you need to really push this forward. It's been out there for 3 years now?
It's been
Two?
2 years.
2 years.
A year and a half.
Come on,
yeah.
let's go, I mean,
Yeah.
come on. You just don't sit on your
Might not be a
posteriors.
priority for them right now.
Yeah, they've got other issues, but it's serious, yeah. I mean, I
Yeah,
think
no.
that's a biggie,
Yeah.
Yeah.
For sure.
Denise,
Um,
same 3 questions?
Yeah, so I kind of am thinking about all of this through the perspective of political will. I think that is huge across all 3 of these questions. I also agree with Bill that seeing a real climate movement kind of for the first time that I can remember is just utterly inspiring. I mean, we've definitely had, isolated communities and certain efforts in this direction, but just really like the inspiration of so many youth coming together and really pushing the conversation forward in a way that a lot of the powers that be are finding hard to ignore is extremely inspirational and really powerful, and I think will help on a lot of these issues moving forward. Relatedly, though, I do still see this political opposition as being a challenge to all of these, to adopting carbon pricing, to adopting other carbon reduction policies. I think that there have been a lot of opportunities to kind of work across political lines, but there are really strong interests opposing this progress as well. And I think that having consistent policies that provide a consistent market signal throughout time is important, and not having things that are coming and going and just being up to the political fates of time is important. And on that note, what people in this room can do, what you at home can do, is vote on climate, like actually care about climate as a political issue. Get out there, get others to vote, volunteer on campaigns, tell your representatives and your regulators that you care about these issues. They need to hear this, they need to hear it often. And yeah, hopefully we can all work together to make this a better planet.
All right. So what I learned from Climate Week, it was probably, as the token scientist and millennial on the panel, I was not like aware of I wasn't aware of how much of a youth-driven movement it was, and I think the press around Climate Week helped that. But what I learned from that was the amount of pushback on it, and the amount of people that are actually ignorant to it, which really what I learned, the 1-sentence summary, is that it's really an education problem, where there are a lot of people that still need to learn how they're having a carbon impact and how that affects the world's environment. So that was what I learned from Climate Week, was actually from the haters. What they did was I learned that they still exist and have a very strong voice, but they need to be, they need to not be shunned away. They need to be, I feel educated is a harsh word, but they need to, people have to have conversations with them.
Yeah.
What was the second one again?
Challenges. What do you see as a major challenge within carbon to value?
I think that there are still massive technological hurdles that have to be overcome. And so, thinking like a scientist, I think the challenges are how can we engineer the best systems? How can we make the systems that are most scalable? Because scale is more of a technological challenge than the initial discovery is at this point. if we could scale everything flawlessly and hit all of our cost targets, then we'd be on a much nicer path than we are on right now. I think that the diversity of different carbon conversion technologies and carbon utilization technologies out there is really necessary. And I think people need to keep innovating in that area from a technical standpoint. And then what people can do in their everyday life to kind of help this. This is going to be my selfish answer.
Please.
Is that think about the amount of carbon that's embodied in the products you buy in your everyday consumer decisions, and it's not like maybe one person won't solve the problem themselves, but when you have a billion people thinking about the environmental impact of the products they buy and everything they buy, then that can have a transformative effect on the planet. Great.
So I'm going to answer my own question as well. I've kind of already referred to most of this, but I'm very optimistic about how more and more people are independently coming to this issue and seeing it as a necessity, as an opportunity, and as an urgent opportunity and necessity at that. The challenges I see, I would say, really come down to the early stage capital gap, because I think I'd rather have the Staff Sheehan's of the world spend their time in the lab and with customers than raising money, particularly at that early stage. So I hope we and others can come up with solutions for that early stage capital gap and create opportunities for the Braemars of the world to invest in businesses that are ready to scale. And of course, what people can do to help me and our network sign up, help us improve our data, give us feedback. There's a lot of tools on the website for you to do all that. And for billionaires, philanthropists, big companies out there, start a Carbon Bell Labs and help accelerate R&D and get us to these innovations as fast as possible. Thank you, everybody.